The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Good morning, folks. This is Steve Rhodes filling in for Larry Pesavento. Welcome to the magical Monday, September 9th edition of Trade What You See, or the Trader's Edge show. Thanks so much for being here. Hope everybody had a great weekend. Hope you caught some of that amazing tennis, both at women's and men's finals. What great matches out there. So let's go see what the matches are like inside these markets. Now, I'd love to hear from you. You can give us a call at 877-927-6648. If you can't call in, you can always send me an email, and that's at steve@tfnn.com. If you'd be kind enough to put radio show question in the subject heading, of course, in our Tigers Den, well, any ping will do. So let's go ahead and get this show started on a magical Monday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes, and right now we got the Dow Equity Futures. They're up 62 points. They're trading out at 26,870. All the U.S. equity futures are pointed higher. The S&P is up nearly 10 points at 2990. The Nasdaq up 21, and the Russell is up 6 points. Across the pond last night over in Asia, a bit of a mixed market. You had the Shanghai up 26 points. That's nearly 0.9% to the upside. The Hang Seng basically flat off 9, and the Nikkei was up 118, about 0.5% to the upside. Flat market in Australia. Over in Europe this morning, you've got the DAX trading up 0.3% to the upside, pretty much emulating what we're seeing inside the U.S. Futures contracts, percentage-wise. And then you've got the FTSE down about 0.7%. That would be about 50 points to the downside. Gold is up $6, $15.21. It's thus far has held support. We'll take a look at support, that being the bottom of its daily profile out there. Silver is trading up 12 pennies at 18.24. Light sweet crude up 65 cents. She's trading out at 57.19. And natural gas is trading out at 2.52. Treasury bonds are trading lower. You've got the 30-year off 1 full point and 6/30 seconds trading out at 163.10. And the 10-year note is 14 ticks. So let's begin by, let's see, there were some questions that have come in. Let me do that. One of the questions was to take a look at Treasury bonds. So we've got T-bonds trading lower. Let's do this a couple of different ways. The very first thing when taking a look at Treasury bonds, and really important as we speak right now meaning as far as the markets are concerned, meaning what we want to take a look at is how Treasury bonds are trading in all of the major currencies. So this chart here takes a look at the Dow priced in dollars. That's the left-hand panel. Then you've got euros, yen, and pound sterling out there. Now we can see that Treasury bonds are moving lower in all currencies. What you're looking for here is you're looking for some type of synergy in the way that vehicles trade, large vehicles especially, Treasury bonds, the equity markets, the U.S. the futures markets out there, gold, silver, light sweet crude, everything. You want to understand, because you know, buyers and sellers, this is a one world market. Totally a one world market. I mean, we have to understand how others are taking a look at the markets that we trade and taking a look at it in their currency. If you don't do that, you might as well just put a gun to your head and blast it, because you've got to understand what the other folks are doing out here. Now, we take a look at T-bonds, which had rolled over from their September to their December contract. What you're going to see and take a look at this chart, in other words, in order for me to price out how bonds are trading in all the currencies out there, I'm not using the current contract, December. I've got to use Stevie's synthetic contract. The numbers here, as far as what things are trading at, are slightly different than the December contract. But what I want you to pay attention to is the bottom of its profile out here. Now, granted, we're trading below 164.01 when we take a look at the December contract. But still, this is the level that, because of the rollover here, I rely upon this Stevie synthetic TAS market profiles versus December. Let me show you. If we take a look at December right now, then it's already generated a change in trend signal. Just got to move back here and actually find it. Let's put up the December. Here's the December contract. So if you see, we take a look at the December contract, and not that this is wrong, but just it's, you know, I want to provide you with reliable information, as reliable as I can provide you, as accurate as I can provide you with. And so here we can see that right now price is trading below the December TAS market profile. But because of the recent rollover, I would rather see how we don't have any real data here to use back before June of 2019. Again, it's a daily time frame chart out there, so I like to use more data. I like data out here. Don't you like data? Well, if we do use our data, so Stevie's watching the bottom of this profile level for this synthetic contract. Why are we doing that? Well, what we have out here, why are we doing that? Why are we paying attention? Why is Stevie even talking about a potential change in trend? Well, for one of the reasons out here is because of the Rhodes Momentum Indicator topping pattern that is in place out here. And right now, today, this could be the bearish reversal candle. And so if we see a close below the bottom of that profile, again, on Stevie's synthetic chart, I give you the number, but it's not going to make sense because you're taking a look at the daily contract out there, the December contract, so it's not going to make sense to you with regard to that. But this would say if we see a close below that level, key level of support will have failed, and price will likely pull back to 153.27 That's the last time. That is the breakout area. That's the most recent breakout area inside of Treasury bonds. That's using our Tommy DeMarco setup 9 count out there, which is in my opinion, it is a far better tool to understand that versus going back. The old breakouts, we would say we'd go look down at the bottom of the swing point out there. And so this is just another way, another tool, an extraordinary tool for helping us to identify support and resistance levels, or breakout and breakdown areas out there. So what this is telling us is the December contract is saying, okay, breakout is in play as we speak. Stevie's waiting for confirmation. Again, the number on my chart that I'm looking at is 163.27. It's showing a price of 164.03. You can do the math on that to figure out what the actual December contract needs to close below in order to give you a confirmed sell or change in trend signal out there. Now, when you get those change in trend signals, you always like to see follow through on that very next session out there. It's always about follow through out here. And Medvedev, man, he had follow through. Now, I watched his match at the quarterfinals when he was playing Stan the Man out there, and watching this guy this first time. Well, I'd seen him play on television before. I don't think he maybe I saw him at a local tournament that we have here in Delray Beach, but he was, he was hitting that ball so hard and so accurate, and so it was great to actually see him come back in that third set, fourth set, and take that fifth set almost to the end out there. In any event, with regard to T-bonds, the other thing that I can do is go to a short-term time frame for whoever asked. I apologize, I can't see, I can't go back and I could go back in my history on my chart inside the den, but I'm not going to at this moment. You can see there's another key level from a 30-minute time frame chart that T-bonds are up against from a support standpoint, and that is its 30-minute breakout area at 163.07. We're trading at 163.07 as we speak right now. So I would say it closed below that at 9:30. It's a 30-minute chart that we're looking at out here, which suggests that we see further downside pressure inside of the 30-year Treasury bond. Steve Rhodes with TFNN filling in for Larry Pesavento, and we'll be right back. Hey, I would love to hear from you. 877-927-6648 or Steve at TFNN.com.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Hey, let's go to our second question. This one coming in from Jim. And Jim is a subscriber to Mastering Probability. So it's my daily newsletter service. And so Jim writes in and he says, Steve, love your charts. And I see the TD setup 1 to 9 numbers on the charts. What are the letters above the bars, A through F, for example, on the semiconductor, the stocks chart that I put in this morning's newsletter? And he's listening in on the show. So so Jimmy, when I take a look at, so there's a handful of different patterns that I look at that generate good top and bottom signals out here. One of those, so let's go through a few of them. And here's the semiconductors, the daily chart here for the semis. The first chart out here, the first pattern that you're taking a look at is a 3 drive to a top pattern. I know I'm not answering your question, but it's on there, and I'm going to show it anyway. So here is a topping pattern. Now, any topping or bottoming pattern, as far as I'm concerned, the way that you put all this together is you integrate your pattern tools with these signals from the buyers and sellers. So your bullish and bearish reversal candles. So it's really important to take a look at those and understand those candles. And I've narrowed down the 17. There's about 17 bullish Japanese candlestick patterns, both bullish and bearish, and you've got some neutral-ish, the doji, the high wave session out there, and I've narrowed those down to 7. I've taken the 17 and narrowed them down to 7 on each side, so that really provide us with the bearish reversal candles out there, and we got that here. You got the bearish sash candle confirming this 3 drive to a top pattern. Okay, now if we take a look at the letters that are on my chart, I'm going to go ahead and delete that pattern that was out there. If I come all the way back down to where the semiconductor index formed a bottom back here on May 29th, you'll see that the TD setup 9 count pattern was on bar number 8. Now, a trend in change can, not does, a trend and change can occur on bars number 8, 9, or the bar following 9. And what I mean by that is we're looking for the lowest low to occur on one of those 3 bars. That's what took place back here on May the 29th. If we start doing our wave counts, and so the lettering, Jimmy, is a part of the Chapman wave series. This is not looking at the Chapman wave set of toolbox out here. For that, you need to listen to Basil's show, subscribe to his newsletter service, or to certainly take his course at teaching the Chapman wave, and I encourage everybody to do that. It's an extraordinary set of tools. One of the aspects of the Chapman wave that I look at are the wave counts, and what we've noticed, it was pointed out to me by one of our other denners, John Z in the Tiger's Den, and that was pointed out to him by a fellow denner, Saratoga Bob, who was really noticing that on those 7th wave letter counts, G, we don't have a G as we speak right now, that too can identify a topping or a bottom signal. Now, Basil refers to that G wave as the rogue wave, but is a certain setup. And right now, these chart patterns here don't emulate that or show that. But so I pay attention to those Chapman wave counts. Now, we can see that it was the 3 drive to a top pattern. Also happened to be wave number 6, or letter F, that was on my screen. Why do I use the letters? Well, because I've already got numbers on there with the TD setup 9 count. So I've just switched over. I used to use it as called it the 7th inning stretch, or wave number 7 out there, letter G. But now that I've used that, the TD setup 9 count is another tool to help a spotter identify a top or a bottom. That's why we've got just the lettering system. Now, the lettering system here could be letter F, or it really could be also letter B, I think is what is going to pop up. And that is once we get past wave number 4, letter D on the chart, you can anticipate that there may be some type of retracement. Could even be a top out there, but again, you want to use Basil's tools for that. So after that 4th wave, letter D, if I do see some type of decline out there, it's where I go ahead. Basil uses the terminology alternative wave count, and in essence, yeah, it's alternative because it's either wave number 6 that we're in, that's letter F, that's the semis, or wave number 2. Now, you may ask yourself the question, why are we so focused on the semiconductor index? That's why I would ask that question. Now, to finish the semiconductors, where are we at right now? What we know about Friday is it was, even though it's not painted on my chart, it was TD setup bar number 6. So bar number 7 could be today, and 8 could be tomorrow, which could be a high, and then 9 in the bar following bar 9. So it says, and also if we make a higher high, we're going to get into that wave number 7. And so I just wanted to let subscribers know that we really do need to focus on the semiconductor index and potential patterns that it has. And the reason that we need to do that is because we are long one of its constituents, one of its components. The component that we are long is Micron Technology out there. Now, we caught Micron Technology because here I'll show you why did we get into Micron Technology out here and looking for a pattern. It was really very simple, and that is that here's the daily chart for it. Take a look at its low out here that it formed back on August 7th. The low that it formed on August 7th was what bar number 8 of the TD setup 9 count pattern. So that was one signal out there. What else did we have as a signal to trigger us into the Micron trade out there? And what triggered us in there was a true breakout and a test of that breakout area on lighter volume. Here was the breakout. Let me try to get a yellow line across here. And a breakout being a gap to the upside. That was on the trading day of July 10th. Now, the reason why I say it was a breakout was because it was with accelerated volume. The volume on that day, well, let me move the chart up here, so the panel, so you can see it. The volume on that day was 51 million shares. So this thing gaps up. This is after forming a TD setup 9 count or 8 count pattern back here on August 7th. So on August 7th, price pulls back with 35 million shares versus the 52 million shares. And it tests that for a series of about, we'll call it about a week. There's a test of that level with 22 million shares on August 9th. There's another test of it with about 16 million shares on August 15th. And what that's communicating to you and I is that there weren't enough sellers to be able to push price down below a breakout level. In the old days, that's what I used for the breakout area, always was accelerated volume, wide price spread. I consider a gap to the upside a beginning of wide price spread out there. And so this chart, or or I should say Micron, had everything that we needed, everything that I needed to take subscribers long. We were getting all of the jostling going back and forth between the tweets and so forth, and it just seemed to me that this was the better, more conservative trade versus the indice out there, such as this semiconductor over the overall, because this was a very strong component within side of it. So if we take a look at now what Micron did on Thursday last week, it took out a swing point with volume. It did it with 33 million shares, taking out the swing point high from July 25th with 28 million shares. Now, ordinarily, we would say, and I would say that's whether it's ordinarily or not, that there is now a confirmed A to B equals CD to the upside inside of Micron. And that could take us up to 57.26 or maybe even 61.76 out there. Now, that is on the daily time frame where price crossed through that B point with volume out there. On the weekly time frame, it didn't. So last week, what we saw from a weekly standpoint, the volume that it was trying to take out the week that began July 22nd at 156 million shares, and last week we were at 96 million shares. So always a little bit questionable. That takes us back to that daily time frame chart. Is there anything here for us to worry about? Well, we can see that on Thursday, price is moving higher, doing it with less relative energy out there. And if there's a bearish reversal candle that forms, that sets up another topping signal inside of Micron technology. So that's why we're taking a look and watching the semiconductors, watching this chart out here. And time for a commercial break. We'll be right back just before the market open.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he's watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Markets are open. Dow's up 41, S&P's up 10, NASDAQ up 24, so meaning green across the board. Spot volatility index is flat. It's down 3 pennies, trading out at 14.97. Let's go to another question that has come in, this one from Alex. Alex writes in, and let me actually get this going here for you from the current slide. And Alex writes, hi, Steve. Does the current rally change your seasonal pattern of lower prices in the late fall, October, November? Thanks. And what Alex is referring to is we're in the unfavorable seasonal cycle, which really begins, you're all familiar with the sell in May expression out there. The reality is, if you take a look at the historical data of the Dow, which this is, the actual unfavorable seasonal top typically occurs around July 21st. That's on average over the last 86 years. Yes, towards May, usually the middle of May, we see the market top out in a pullback. Then we see a little summertime rally that retests that area. Typically, the May highs out there. Sometimes it exceeds it. Doesn't matter whether it does or it doesn't. Then we see the final turn, the summer doldrum, so to speak, with a move down into the middle of October. So that's the cycle that is in play out here. So we just, Alex, we just want to focus on it and pay attention. So the mere fact that the market will typically make a low in October, I think that's still in play because it's only September the 9th. And so we've got at least another month out there. So then that says, well, okay, so what are the markets doing right now? You know, what the markets are doing is we're just simply in a consolidation. Here's the larger consolidation. Well, that's not it. Where is the larger consolidation? Let me see if I can give us the larger consolidation pattern out here. I know I've got it handy. It's just the question is, well, where did Stevie put it? Is this it right here? There we go. So here's the Dow, the S&P. So the upper left-hand chart is the Dow. Upper right-hand chart is the S&P. Lower left is the NDX 100. Lower right is the Russell 2000. And so we're really still in this consolidating pattern. Very choppy out here inside the markets. And so the larger picture is we're in a consolidation. We don't exceed the consolidation or break out of the consolidation in the Dow until we close above the trend line that's established from, in my opinion, the trend line from January of 2018, then the October 2018 level, and resistance was found here in July. That July high that we talk about taking place out here inside the market in the unfavorable seasonal cycle, which did push price lower. We don't know if it'll continue, if we'll see price move even lower coming into October, but we're still in a consolidation. So the answer is, Alex, we're still in a consolidation, and there may be a push lower into October. The S&P, you can see the same, or its trend line area where price would need to get above. You can see that in July, the top of the high in July that was formed out there was right at that trend line inside of the S&P 500. Now, we're also in a smaller consolidation. And the smaller consolidation, that's one that I showed here, looks like this. Now, this is taking a look at the equity futures contracts out here. And the equity futures contracts really show their consolidation pattern. Their consolidation pattern, I don't know why this keeps jumping like it does, but it does. I'm referring to the ES Mini chart. I did fix this last time, but basically the consolidation inside the ES Mini has been between 28.16, we'll call it, and 29.41. And what we saw out here was a clear break of that last Thursday. A real break of that. In fact, we saw the ES Mini and the NQ and the Dow each break through their consolidation. Those are the yellow box areas. The reason why I've got the yellow, green, and red are for the following reason. When you break through a consolidation, it then offers us a measured move. The measured move is equal to the consolidation. So what we say when we see a breakout of consolidation, and it works on all different time frames. So a shorter term time frame, if you can find the consolidation, it's a beautiful thing. It gives you a very simple measured move where price should move on the breakout equal to or greater than the consolidation. So while the market was consolidating, subscribers and I didn't know whether it was going to break to the upside or to the downside. If it broke to the downside, the ES Mini, we're looking at a price projection at the 2690 level. Likewise, a breakout to the upside, which is where we are at right now. We've got the 3066 level that is in play. And to further discuss the ES Mini out here, let's go to John in Philadelphia. John, thanks for calling. Thanks for holding. How are you? How was your weekend?
Steve-O, the weekend was terrific. Glad you were entertained with the sporting events.
Absolutely. That's what the weekends are all about.
I wanted to ask you just about the S&P futures that you've been dealing with thus far this morning.
Yes.
And ask you this very specific question, Stevie. I am looking at the 30-minute bar chart on that contract, the September contract, and I note that there was a pullback bottom on that. It was Thursday late in the day. And since that, moving higher into the 2991.5 high that occurred on two 30-minute bars in the past 3 hours, I've got a Chapman Wave Peak G at that level on that 30-minute time frame. My question is, we've turned down just a bit, but given that that is a Peak G and a patented Saratoga Bob short sale signal, what do you look for? What levels need to be broken on any decline to tell you the decline off of 29.91 is something more important than just a tiny pullback off those highs?
Sure. Okay, so the answer to that question is going to be 29.75.50. That's the number that I'll be watching. Now, let me explain why. So, folks, what John had mentioned as a topping pattern was that seventh wave move. And if we take a look at a low back here at 4 o'clock in the morning, that low was on the actual trading session of September the 5th. And we just simply start counting our peaks. And I'm not going to go through the entire Chapman wave. What you'll see is that we saw wave number 7 or letter number G on my chart at 8:30 this morning. There was also a TD setup 9-count pattern that was in play out here. There's also, you can see these diagonal lines, the Rhodes Momentum Indicator topping signal. And what John was referring to was we started seeing those take place at about 9 o'clock in the morning on Friday. Now, when you get that topping pattern out here, and that was confirmed with a bearish engulfing, an evening star, and a key reversal session, that was at the 9 o'clock session. What a top always says to me, John, or bottom, is that in this case here, a top seller should be able to push down price to test support. Just so happens that the profile that was in place then is the current profile that is in place now on the 30-minute time frame chart, and that is what appeared to have stopped any momentum to the downside. Support held. There needed to be a close below that to say that there was a further retracement and a breakdown in order for us to go to a larger time frame chart to look at where those price levels might be, or even on this chart to take a look at a prior breakout area. So 29.75.50 is the level that was support on Friday. It is still the level today. I would not be surprised to see that tested during the morning hours out here. The reason that I would say that is as of 9:30, and if as of 10 a.m., as I'm coming off the air, if the ES Mini is still trading below 29.86, that's the last time, or that's the low of its TD setup 9-count. That is a support or a breakout area. There is a close below that, and we're 29.83. John, it looks to me like price should go tag that 29.75 level again. But to answer your question, I would need to see it close below 29.75 to say there's something more to it.
Thanks a bunch, sir.
You bet. That was John in the city of brotherly love. And we do love that brother. Steve Rhodes with TFNN. We'll be right back.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the Tax Opportunity Zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year, or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year, or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you're a trader in the market looking for exposure to gold or gold mining equities, then now is a perfect time to sign up for Tom O'Brien's Gold Report. The summer is over, gold is trading back above $1,500, and the 10-year Treasury is hovering at around 1.5%. Tom O'Brien has been writing his weekly gold report for almost 18 years. There's no one that knows more about how the gold market trades and how gold mining equities react. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, Tom publishes his weekly gold report with coverage of gold, silver, bonds, the XAU, HUI, GDX, the dollar, as well as more than 30 different mining equities. As of September 3rd, Gold Report subscribers have 5 active open positions with an average unrealized profit of almost 38% for each position. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up today by visiting TFNN.com. Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour. Next on TFNN.
Welcome back, folks. So another question here about the seasonal cycle. So let's just answer that. This coming in from Tim in Massachusetts. And in essence, Tim is asking the question, do I still anticipate a low between October and January? So so we know here, what we know about the seasonal cycle is we know that there is typically a bottom that forms inside the Dow around the middle of October. Let's not pay attention. Let's more focus on the timing versus where prices trade in relationship to, say, the June 25th low as an example. And then that's really where the Santa Claus rally begins here. So we look for some type of pattern to form in that time frame. What Tim is also referring to is the next, after this unfavorable seasonal cycle, we typically see the market move higher into the end of December, early part of January, typically January 6th to be exact. And then we see the market move lower into the end of January. And so that's the end of January time period that Tim is referring to. And Tim, the easiest way that I can answer that question is just simply that as long as the equity markets remain in the consolidation, when you're in a consolidation, you can't bust them to the upside. Tom has a great expression. I love using it. Markets will try to bust it to the downside. So I still believe that it's still valid as long as we remain in this consolidation pattern for some type of low to occur in October. Maybe it's January. But we really want to rely upon the patterns that the markets are trading. Just like we looked at a short-term time frame with John and Philly, we looked at wave number 7. We looked at the Rhodes Momentum Indicator. And what's really so important for you and I on any topping or bottoming patterns is to understand where support and resistance is. If we can just do that, understand support and resistance, it will assist us with our, and it's easy to do. It's fairly easy to do out there. I think the TD setup 9-count pattern is one of the easiest technical patterns to be able to track, especially when you're using longer-term charts. The shorter-term charts, and you've got more counting to do, but the longer-term charts, much easier to do out there. Counting your wave counts, 1 through 7, that is really easy to do out there. And I think here at TFNN, we make it relatively easy for those of you that want to become technical masters, learn something new, add something new to your toolbox. My newsletter service comes with archive workshops. I'll do another live when I'm working on some other tools and updating some software before I want to do another workshop out there. But we've got the tools out here, and so the seasonal cycle is another tool that we look at just to give us a feel for where the markets are headed to and understand when we're going against the tide or we're going with the tide out here. Tommy writes in, a different Tommy. Steve, please explain if you can. Why does the yen have a positive, practically tick-for-tick correlation with gold? I've yet to find any analyst who can explain this intermarket relationship. You've spoken about this many times, Tommy, in Winter Haven. To understand, well, it used to be that the yen was the carry trade out there, and so why do correlations exist? Why do we pay attention to the seasonal cycle that is out there? Let me, and so Tommy, what I want to do is I want to update you further with regard to taking a look at gold and just one currency or two currencies, the dollar and the yen out there, because I don't want to do you a disservice. So let me see if I can fairly easily find the longer-term chart for gold. Should be able to do that here. So indexes. I'm speaking to myself as I'm looking at my screen. Indexes, gold, other currencies. Just looking for the later date out here. I'm hoping that it is this one. Hoping. Let's see if it is. I'm looking for the monthly charts to populate the screen out here. Yeah, okay, so we've got the monthly charts. Here's what I would rather you kind of take to help guide you and answer the question, because it's really about, we talked about at the opening of the show, we have to think in terms of us being in a one world market. What that means is that in order to properly trade the markets and commodities out there, we must understand how each of those things that we trade are performing in terms of the other major currencies out there. So not just in terms of yen. We can go take a look at the correlation that is out there, but what sustained moves in any asset class out here, they need to be moving higher. There needs to be just nothing but buyers. And there needs to be nothing but buyers in all currencies out there. And you'll see the sustained moves. Here's the monthly time frame chart for gold. And you can go take a look at the serious bottom that was formed back in the early 2000 time frame out here, 2003, 2004. And just take a look at that sustained move to the upside when gold actually topped out. And take a look at how it was moving higher in all the currencies, Tommy, not just taking a look at a correlation between the yen and gold out here. And this will service you better. Like, I am always learning. If we're not learning, we're dying, right? If we're not growing, we're dying out there. So learning, so we're all, and that the cool thing about the markets is that we are always a student of the market. As John in the Tiger's Den, Z, he just talks about this as being the market laboratory. And it is a laboratory. Only we don't have Bunsen burners, so to speak, and that's a good thing, because otherwise we could start a huge fire out here. But our Bunsen burner, so to speak, is just simply understanding what is going on in terms of all of the other major currencies out there. So whether that's T-bonds or whether that's gold, Tommy, that will provide better service to you then just take a look at just take a look at gold is performing in one currency out there. Now, what we can see here about gold is that gold is traded to a new all-time high in terms of yen, in terms of euros, and in terms of pounds. Now, the beauty there is, and when you go back and you take a look at how assets price out in other major currencies, what you will see is that when they do form some type of major top, they are typically trading at that new all-time high in all currencies out there. Now, what did I just say? That's a great question. I'm asking myself, what the hell did I just say? What I said was gold in terms of U.S. dollars is not at a new all-time high, where it is in terms of yen, euros, and pounds. So the deduction there is that we will see a new all-time high in terms of dollars. I'm not saying that's right here, right now, that this is the beginning of it, but I am saying that the move higher in gold is not over, and that we should all be fortunate enough, well, potentially, for gold to actually have a nice pullback. Maybe that pullback is into October or January. Who knows when the actual time frame is? But what I want you to know is that, and we're seeing a bit of a pullback, and gold hasn't broke through support just yet, but it's close, no cigar out there, and so we'll be watching for that. But with regard to trading gold, we want to take a look at how it's doing in all major currencies. That's a longer-term picture of gold. If we take a look, and gold very easily may have already topped out here. It ran into a resistance level being the 1561 area, has not closed below a key level of support on a daily basis, but it wouldn't surprise me to see gold pull back into the 1498, then 1462, then 1426 level, and I'd say 1426 more so than any other price point that I would be following out there. But I'm not willing to give you that call right now. Not that I'm not willing. It's just that gold hasn't closed below a key level of support in order to signal that to us. You might ask, what is that key level of support? So let's go take a look at it. That key level of support is going to be based upon its TAS market profile, its daily TAS market profile, and that number is 1508.40 out there. If you do see it close below 1508.40 out here inside of gold, I'm not saying head for the hills. I'm saying you best anticipate a further retracement inside of Goldie locks out there. So I hope that helps you out, Tommy, with regard to take a look at gold. I know it was pretty long-winded, and just the yen. Those were Stevie's old tools. Now you're taking a look at Stevie's newer tools. And probably a year from now, there'll be even newer tools out there. If we're not growing, we're dying. And none of us are dying here at TFNN. We're all growing together. We'll be right back. I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools, as well as provide great market calls too. Sign up today.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Let's take a look at the December corn contract out here for Bob in the Tiger's Den. And so here's what we take a look at this picture out here. What you can see is that corn is sitting at a short-term support level, both from its 30-minute time frame chart, its 120-minute time frame chart, its 60, which I had taken off the screen out here. So it's at a potential short-term support level out here. On the daily time frame, which is the very right-hand panel, price is trading below the bottom of its daily and weekly profile. profile, and but that just tells you we're trading below support. Trading below the profiles, it tells you that it's bearish or sellers are in control, but it doesn't tell you how to find a bottom. To find a bottom, we use Stevie's other sets of tools out there. Those sets of tools include the Rhodes Momentum Indicator. That's where price pushes lower, does with less relative energy, or pushes higher with less relative energy out there. And that's where the top was formed out here inside of the contract for corn. We see that Rhodes Momentum Indicator top. Now what we can see is price is beginning to stretch itself to the downside, Bob. And we can see that if we do our wave counts, we're in wave number 6. That's letter F. But we don't have a bullish reversal candle. So to the extent that you are trying to buy a bottom out here, it's not here yet on the daily time frame. It says to be patient. Look for some type of bullish reversal candle out there. Then your first level of resistance would be old support. That would be the bottom of the daily box at 374.40 out here. Now, from an intraday standpoint, what we can do is we can take, remember on the shorter term charts, the 30-minute, the 120, and the 60-minute price was near support. Well, on a 30-minute time frame, we also have a TD set up 9-count pattern. The low of this bar that ends at 10 o'clock, if there's going to be a short-term low, it happens right now as we're speaking, live on the air. The first key level of resistance, 356.25, then 357.25. Those are the TD-ST resistance lines out there. And that is corn, courtesy of Bob in the Tiger's Den. Thanks so much for being here, folks. Stay tuned. Another great hour of programming. You've got Tommy Sr., Tommy Jr. Can't get any better than that. And I'll be back with you at 1 p.m. live. We'll take a look at the markets then. Have a Monday, magical Monday, marvelous Monday. I look forward to speaking to you again soon. Take care.